What's up? What's up? What's good, everybody? It's Sir Willoughby, and welcome back to NexGen Traders Stock Hustling Network. It's the Hustle House brought to you by NexGen Traders. And if you new here, hit the like, subscribe, notification bell, tap in with us every week. We're dropping one or two weekly videos to keep us going. Turn on your notification bell, and every single week we're gonna be breaking down the market's biggest news, biggest market events, and what Wall Street really got going on. And we're gonna be knowing what's going on, and we're gonna be very informational, and we're not gonna be reacting to it. We're not just gonna be jumping on something because we hear some news. We're gonna actually break the news down, decipher what's going on, so we can make the educated decision for you. And this is no information for you to buy, hold, or sell any asset, any shares, or any stock, or trade anything. This is for educational purposes only. And I'm gonna give you insight on what I'm doing and how I make money in the market. You get what I'm saying? So, but before we dive in, happy Juneteenth. You feel me? Happy Juneteenth to everybody who is free, and we on this journey in this path for freedom. We on this journey in this path to be very disciplined to stay, so we can stay free. We on this path so we can free our kids from working 9 to 5, 40 years, and we trying to break the cycle of not knowing about financial literacy. So let's congratulate everybody today. Happy Juneteenth. I hope you had a good cookout. I hope you had a good event. There was a lot of things going on in the town, a lot of things going on in the city. The markets was closed today, which really gave us a perfect moment to go ahead and zoom out so we can see what's going on after the recent sell-off. At the full week, we get our minds right before Monday. A lot of news already that happened, and today is Friday only, because this was one of the most eventful weeks that we had in a while. So we gotta be very, very cautious coming into Monday. Here's what's happening right now. We got Kevin Warsh, the first Federal Reserve meeting chair, just happened on Wednesday. He held the rates. You know what I'm saying? The Fed flipped the narrative. So he was very hawkish, so it could be cuts coming in, or it could be rate hikes coming in. We don't know what's going on because he came in hawkish, talking about he got a task force and a whole lot of things that's going to be going on. He's going to cut some things out that the Fed normally look at, and he's going to be looking at a different gauge. So he's coming in very hawkish. He's changing things. He already putting his hat down. We got the S&P 500 and NASDAQ plunged on Thursday. Then recovered a little bit there, today. Futures are still trading today, but we can't trade them. So the market is still moving a little bit. It kind of recovered today, but Thursday we got a good sell-off. U.S. and Iran was supposed to sign a peace deal today. The memorandum that was supposed to sign it today in Switzerland. Talks got canceled. We're gonna look into that. We're gonna see what's going on. We got AI semiconductor stocks still showing some resilience all week. They showing resilience all week, and now the market heads into a long weekend with unanswered questions. But we finna break it down. We finna break it down. So the real story is the dot plot. What's going on with the Fed, man? I'm gonna pull up an article for y'all to check out real quick. Up an article, man. Move this out my way. Alright, man. The Fed rate decision happened, man. They held the rates, which the market already kind of digested that in. But what the market did not digest in, what Federal Watch was saying, Federal Chair was saying, all right, the Fed in most, because people only are talking about half of the story. So we're gonna get into it. Yes, the Federal Reserve held interest rates unchanged at 3.50% to 3.75%. The part was expected. Like I said, it was already priced in. No surprise there. But what was not expected, the dot plot. For those who don't know, the dot plot is the chair the Fed releases every quarter, where each of the 19 officials unanimously marks where they think interest rates should be by the end of the year. Back in March, the chart was pointing toward a rate cut. down to 3.4%. This week, the whole median projection just jumped to 3.8%. That means the Fed just flipped the script. We went from the cut expectations potentially height territory with the high inflation data that just came in from the last 3 weeks. So in 9 out of 18 committee members are now projecting at least one rate increase before December 2026. Six of them are projecting two hikes. Let that just sink in for a second. If it that wasn't enough, the PCE inflation projection coming up this week for 2026 were revised from 2.7 all the way to 3.6. So they think inflation data is going to come in a little more hotter. PCE is one of the main cores that the Fed look at to gauge where the market may need to go, or not the market so far, but the economy. That is the major upward revision. Now, here's the wild card. Kevin Warsh, the new Fed chair, refused to submit his own dot. He said flat out, he did not put a dot on the chart. His reasoning, Wash believes the Fed has given markets too much forward guidance for too long. He's so overhauling the entire communication strategy and announced task force to review everything, press conference, dot plots, meeting schedules, and even the transcripts. Translation for us traders, the era of the Fed telegraphing every move is over. That means from here on out, every CPI report, every PCE number, every jobs report matters more than it has in the past 4 years. Wall Street doesn't get easy. Clues anymore. Here we have the trade deal. So we're gonna get into it. The market reacted. Yeah, the market reacted and sold off, then it kind of recovered. Here's exactly what happened in the markets this week. You had Wednesday, the Fed hold rates. Hold on. I'm already 7 minutes in, man. That's what I had some music playing in the background for us, man. So we just don't be hearing my fish tank. Yeah. So we just don't be hearing my fish tank, man. I don't want y'all to just hear that water all the time. If you like the music playing in the background, man, let me know in the comments. All right, so you got Wednesday, the Fed hold the rates. You got the markets process the news. Thursday, the market plummet 3.8%. And the S&P 500 and the NASDAQ both fell hard. On top of that, you got the traders hard, fully digested the hawkish shift in the dot plot. It was a real, but the weight said what? Momentum across Wall Street. Friday, Thursday, closed the markets. So Juneteenth, we had to come in, and the market still bounced back strong. The Russell came in leading the charge at 2.12% gain, closing at 2,979 points. The NASDAQ added 1.91%, closing at 26,517 points. The S&P 500 gained the losses that it took. That was 1.8%, closing at 7,500. Even the Dow ticked up 72 points. Now, here is what I want you to notice. Despite a hawkish Fed, despite Iran uncertainty, despite everything, the markets found buyers that came in. This is not the behavior of a market in full panic mode. This is a market digesting bad news and still finding the floor to bounce off of. AI and semiconductor stocks still showing strength. Let's talk about it. Let's talk about it real quick, man. So the chip rally has gone parabolic. It's time to separate the pillars from the pretenders. Let's talk about it. Even with all the macro, the noise in this week, the semiconductor stocks showed real resilience. The Philadelphia Semiconductor Index pushed toward record highs at the points during this week. The names in the AI chip space continue to track the institutional bond. This tell us one important thing. Big money is still running from AI. They're still buying the dips. They still buying the dips. Ain't nobody running from it. They trying to take full advantage of what's going on in the market right now. Definitely with these big chip company names. Now that doesn't mean you chase every move though, cause Micron going crazy. You got all type anything around the chip AI infrastructure is going wild out of nowhere. Some more big moves. We had Micron run up $100 on Thursday evening. So now that don't mean you chase every move. A great company can absolutely be a bad stock when the expectations get too far ahead of it, reality. And that's exactly where we're heading. The AI trade is entering what I call show me phase. Can the video keep growing revenue at the pace it's growing at? Can Microsoft, Amazon, and Google turn AI spending into actual profits? This is things we have to look at and try to understand. Can smaller AI names justify their valuations? The next round of earnings is going to be the answer for those questions. And the market's reactions will tell us everything. Now let's jump into this Iran situation because they're gonna have the market spooked on Monday. The market's gonna be real spooked on Monday because of what the Iran got going on. U.S. Iran hit records early snags and Swiss talks fails and proceed as planned. That's what's going on right now in Iran. So let's talk the geopoliticals because it's a matter right now. It's pushing the market. Because the week of had a plot twist early in this week, the United States and Iran signed on a memorandum of understanding in France. The U.S. CENTCOM announced the end of a blockade of the Strait of Hormuz, and traffic began moving through the Strait, and oil prices fell on the news, almost down to $80. Energy stocks pulled back. Markets viewed as very positive. And this to just today, the plan follow up in talks in Switzerland. This is where they were supposed to go sign the deal. Was called completely off. The signing ceremony was scheduled was canceled. So does this where does this leave us at? Well, can we get in and understand what's going on? This is the framework in place. This is a MOU by the next steps. But the next steps in the negotiation process are now in question. Here's why this matters for our portfolio. Every headline out of the Middle East creates a chain of reaction. Even tension rises, oil spikes, inflation gets harder to control, rate cuts become even less likely, growth stocks and tech take the main pressure. Watch this story closely as headlines head into next week. We got to keep our eye on that. The markets this weekend, where we stand at going into Monday. This where we at, man. All right, where we stand at going into Monday, man. We gotta just keep the full picture open. The market is going in a long weekend. We got Juneteenth today, so we got basically like a good 3 day weekend. A Fed that's just sitting on a possible rate hike with hawkish cuts in its play. Iran peace deal on the edges right now. I think you had a news break come in not too long ago saying Israel had committed some strikes. I don't know how true that is right now. I don't got the article. You guys let me know in the comments. Pull it up for me. If it is true, yeah, that's gonna be even bad. AI stocks that are resilient but entering an earnings proof phase. A market that sold off Thursday now is recovering on the back end. So it's like the market kind of already has some of the information digested in. What does that mean? It means Monday morning is going to be very interesting. Traders had all weekend to process the Fed news and the Iran news and this week's price action that's going to be coming forward. Why, when, and they come back on Monday, someone is going to be wrong. But about that direction, we got to know which way it goes so we can make money up or down. My read, we are in a wait and see what the market do. I don't see any evidence for a major crash, but I also do not think we are heading into a straight line earlier from here. We probably could start consolidating in the range of the 345, 745 on the 735 and the 745 on the spot. Kind of been seeing that, and I'd say the high end 755. But there are two more likely scenarios, and let me tell you about them. We trade sideways, like I just said, through the summer. The market just keep consolidating. We keep buying them dips. We get eating up. We eating up. We eating up all summer heading into Q2 earnings, while the summer market waits for the earnings proof for the real AI companies. Or B, we get a healthy, good pullback, 5 to 10%, and that would be great. It'll hurt your portfolio for long term, but if you start eating the dips and you've been cashing up, it would be amazing. But before the leg come higher, it could possibly happen. That's what a lot of analysts are kind of hedging at. Both of these scenarios are healthy. Neither is one that's a disaster. The market kind of needs a correction, if you ask me. The key is managing your own risk. And right now, you need to know where you need to set your stop losses at, take profits. And again, this is not no information for you to buy wholesale. It's for information for you to make the education decision on your own. What am I watching this week? And here are my top 3 things to keep my eye on, and you should probably keep your eye on too. PCE inflation data. This is the Fed's preferred inflation measures, and with PCE projections jumping to 3.6% from 2.7, this report has new urgency for everybody to keep that eye on. If it comes in hot, expect good volatility coming in. Iran negotiations, will talks be rescheduled? What's going on with the memorandum of understanding? Oil prices will move every headline. And keep an eye on the energy stocks, how they react. Will they continue to go up? XOM especially. AI earnings set up. This is the setup for the AI earnings. And we are getting closer to earnings season. After the next week and a half, we're gonna be start edging on the first week of July. Earnings gonna start coming out. Every piece of forward guidance from tech companies right now is the big scrutinization, which what institutions are loading up, are they trimming, and what the insiders are doing. We gotta watch them because the insiders give us a direction when we follow the money. My watch list, plays I'm watching heading into Monday. All right, let me break it down specifically. The names I'm keeping my own so far, and I'm starting to add. These are tickers I'm watching, and I want to give you the context on how you can understand and not the setup and not just the symbol. So I like NVIDIA right now, trading around 210, heading into the weekend. The NVIDIA is the centerpiece of the AI trade. This week reminded us that it stays on everybody's watch list, and it's the stock that shows good strength even through the Fed volatility. The company recently raised $25 billion in new debt, and with signals they are betting big on what they have in the future. Wall Street 12-month consensus targets a new 299 stock price. The key question Monday: do institutions keep buying, or do we see profit taking after the recent run? How NVIDIA opens will set the tone for the entire semiconductor sector. Definitely after they just gave the buy signal for Marvel, saying that Marvel could potentially be the next $1 trillion company coming up. Palantir Technologies. It's what I like about PLTR. Trading around 128, 130. This is a very, very good low end for Palantir to start accumulating for me. And my suggestion is I am looking forward to go towards the 160 to 175 range once everything starts to settle down. This is heading to the weekend. Palantir is the AI infrastructure play that continues to get overlooked by people who are only trying to follow NVIDIA. This week, Wolf Research upgraded Palantir to a hold previously after rating it a sell. That is a signal that even the bears are stepping back into seeing what Palantir got to offer. The AI platform, AppCon 10 events are going on, and the government contracts keep this name very relevant. Watch the reclaim of the 132 to 135 zone for a potential momentum trigger up to that 150, 160, 75 range. The 52-week range, The 52-week range is 122 to 207. That context matter because there's a lot of room to the upside after the recent sell-off. Let's jump into Marvel Technologies. This is one of the biggest movers this week, up 12% on Thursday alone. Marvel was absolutely on fire this week. The key bank raised the price target from 385 to 260, citing NVIDIA collaboration and to 385 from 260. Yeah, so that was a big increase. And citing NVIDIA collaboration and AI network and demand, the stock ran from 205 to 220 range in the late May to print in the 308, 326 range by mid-June. And here's the kicker. Marvel is joining the S&P 500 on Monday, June 22nd. That means the index funds are required to buy it, which for continued volume momentum as the inclusion becomes official, high momentum name size accordingly. I like my coin too, MU. It came under pressure as a broader chip sell-off, but bounced back. Micron was caught in the early wet analysis called a parabolic 7 unwind. A basket of explosion semiconductor names that saw coordinated selling, but MU sliding toward the $942 era, but the long-term thesis remains intact. AI infrastructure requires memory and Micron is a key supplier of memory, which for stabilization and potential reentry sets up above the key support. The real catalyst for Micron will be the earnings later this year. Stay patient for this one, and once it fall down a little bit lower the $1,100 range, you could still potentially start buying some more of this thing. I like it. Apple closed at 298 Thursday, all-time high hit 317 earlier this month. Apple has its own storyline this week. The CEO Tim Cook confirmed that the company plans to raise device prices to offset earnings memory chip costs. They're trying to create their own chip. And there is also news about Apple working with Intel to design extra chips, a collaboration that sent Intel shares soaring higher. The stock is pulling back from its all-time high and approaching the 295, 298 support zone. This is a critical area. Earnings are set for July 29th. The setup holds 295 and stays constructive. Losing, we could see it around the 280s, I like 278 before the earnings. This is to watch carefully before the summer. So we're gonna keep our eyes real tight on Apple. SoFi. SoFi play big. SoFi play real big on what's going on with the rate hikes. Trading around $17 to $18, down roughly 32% this year. It's very, very affordable right now. SoFi is in the Couturing playlist right now. The stock has been under pressure all year. But here is what stands out. The CEO, Anthony Nato, has been personally buying shares after the 32% drawdown. When the CEO puts their own money in, that signal's worth noting. Q1 results were strong. 1.1 billion revenue beat estimates, and worth noting, Q1 results were strong. You had net income jump to 131% year over year, and you had members grow up to 14.7 million. And the loan originations hit record billion of 12.18 billion. The business is profitable and growing. The stock just has not responded yet, which the $17 level is key support. Hold it. And the record recovery setup becomes more interesting heading into the summer. And what we've been playing and keeping our eye on in the community is Sound AI. We like SoundHound AI in the community, man. Trading at between 693 and 714. This week at 52-week high was around $22.17. SoundHound is the high risk, high reward name on the list right now because the stock has been hit hard, falling down all the way down from 22 to under $7. But the fundamentals are actually improving. Q1 revenue grew 52% year over year to record for 44.2 million. Automotive and IoT organic growth came in at 88%, and the company just announced $100 million acquisition to purchase Live Person to expand the AI platform. The analyst consensus price target this thing near around 12, 14 at the max $15 range. Currently a 100% upside from where trades at now. The risk, the stock still carries ongoing net losses and high cash burn. This is a speculative play. It's very position size is quarterly. Analysts are on the 657 zone as a lot of institutions are buying down there. That's my bottom line on the watch list. The AI semiconductor names are coming in. NVIDIA, Marvel, MU, or institutional money continues to inflow into these companies. Got Palantir and the AI infrastructure name changing the narrative. Got Apple, the blue chip set up. We're going to see what they do with Intel. Maybe if they chips gonna perform in the next Apple iPhone debut. So far, it's the value criterion play for patient traders. We're gonna watch this because it's gonna play real good around the economic data. Then you got sound. This is a high convert swing, high risk, high reward. So this is not no buy signals. These are names I'm educating you on, and I'm watching myself. Do your own analysis. Do track your own key levels. Manage your own risk. I want to leave you with this. A lot of people are going to panic over the Fed's rate hike signal. A lot of people are going to panic about Iran. But here's what I want you to know. After years of trading in the market, volatility is not your enemy. Reacting emotionally is very much your enemy. The traders who are going to win over the next 6 months are the ones who are going to stay disciplined right now. The ones who protect profits, who size positions correctly, and who do not chase extended moves. This is what we teach over here in NexGen Traders every single day. And we're not here to guess. We're here to read the market and execute with a plan. So if you get value from this video, hit the like, hit the subscribe, hit the notification bell. Come over here and join NexGen Traders. The link will be in the top description below. Get in with the family. Join the classroom. Start listening, start learning, start educating yourself so you can learn to earn. Once you get in the class, the first thing you need to do is build your foundation. Once you build your foundation to understand that, you hop over here and jump into options trading made simple course, so you can really start getting down and dirty and making some good money with us. As we start trade options every day, every other week, we swing trade, we day trade, we do zero DTE, we do 6 months plays, we buy long-term plays, and we learning every day. We learning every day. Come learn with some experienced traders. And it's program brought to you by Moomoo. So go over to Moomoo if you don't have a trading platform. Moomoo got all the level 2 data. This is where we get our upside, know where the money is going and follow the big money. We got level 3 data over there also. And some of these data is free if you don't have anything to deposit. You just want to jump over there and learn. But you also need to come over there, man, deposit $100 in that account, get 8.1% on your money, APY, every year, just from not having uninvested cash. You can do that with Moomoo. The link will be in the description below. So if you like everything, the market's gonna pull back next week, man. Let me know in the comments what you think. How you know what you think earnings is going to. If you want access to these daily watches again, hit NexGen Traders link. Come join us in the school community. Motivation plus dedication equals progression, man. I see y'all in the next one. Y'all take it easy.